Hello, I'm Greg Bonnell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights to help boost your trading potential. Coming up, markets in the green, but the mood remains fragile. Investors turning their attention now to earnings. Over 100 S&P 500 companies set to report this week. That includes Tesla after the bells today and Alphabet, which reports on Thursday. We're going to break it all down for you and the things to watch. Plus, gold keeps prices keep moving to new all-time highs, $3,500 per ounce. It breached that level earlier in the sessions, pulled back a little bit. Interesting moves. We'll take a closer look in today's technical take, trying to determine if this increase can hold. And in the chip sector, the bull versus bear showdown over Intel. The trader debaters standing by with both sides of the debate in this week's trading debate. That's all ahead. You're watching TD Active Trader Live. Let's check in on those markets. Choppy days. Hasn't it been? Yesterday we had a sell-off on concerns about Fed dependence from political machinations. And today we got some green on the screen for the S&P 500. Quite the roller coaster ride. So some relative calm. We're still on edge, though, evidenced by the fact that if gold's pushing higher and higher into record territory, it does tell you people have some concerns about what's happening out there. But we do have a bounce after yesterday's sell-off. We'll see what happens next. It feels like a minute-to-minute kind of thing, doesn't it? Let's check out the heat map. I want to see what's actually powering these gains right now. And we're seeing a fairly healthy bid into some of the tech names, which have been beaten up in recent weeks. Apple up 2.5%, Nvidia making some gains as well. But as I look across the sector, even the banks right now, some of the financials on, there they are right there, hiding right in plain sight, showing some strength as well. We got a lot of earnings, though, including Lockheed Martin. This is the interesting one. In the pre-market, it was actually showing some activity to the upside. It's starting to come off a bit of that. Lockheed Martin actually had a profit beat, resilient demand for missile systems and fighter jets. Obviously, no shortage of geopolitical strife and concerns out there. Total revenue growing to almost $18 billion for those 3 months. That's up 4.5%. But at the same time, the company didn't really have a lot to say about tariff impact going forward for the year as it stood by its guidance. So you start to mix all that together, and perhaps the street is starting to ask some questions on that. Tesla, after the bells today, pulled back 6% in yesterday's session. Today, it's making some gains. Last time I checked, up about 3.5%. We'll get those reports after the bell. Of course, stock's down about 44% for the year as of yesterday's close. Elon Musk. How can you not talk about Elon when you're talking about Tesla, his role with the government and overhang for the stock? Some big institutional investors questioning how much attention he's paying to the name. Tariffs are also a problem. Remember, they're an automaker. They have parts that come from Mexico and China as well into those vehicles. So lots of questions for investors when they report after the close. Will those questions be answered? We don't know, but they've already warned us that deliveries are down year over year as well. And that's your market update. Joining us now for a more technical take of what's happening out there is here in a mean Jason Nadek from our TD Direct Investing Education team. Here we go, another show. Lots of things to talk about. Where do you want to kick off here?
We're going to kick off with the triple Qs. Look at the Nasdaq, as you mentioned, Greg, right off the top of your read, that it's we're hitting right April Q1 earnings. They're going to be critical, and obviously today or this week, Tesla and Alphabet forming the mags. We should see a bit of volatility shake through on the Qs coming in. So one of the things I just wanted to point out, what's going to really impact the markets besides the earnings as well that we see coming in is, if the earnings don't shake out, and if there's more waiting and there's more conversation around what the tariff impacts are going to look like, what is the guidance going to come out of this? I know there's early warning signs in Q4 saying that some people were suspending their guidance, some companies, but this is really where we're going to start to see the effects of those coming through. So looking at the chart right now in the Qs, we've seen obviously after the major sell-off, we saw this double top pattern that had formed, and we saw the measured move get completed, meaning it already did its push down. But what we now have formed over here, and it's kind of a little bit, I'm going to try and cut through it as best as I can, but you can see on this blue, we have this bear flag that has formed. Now, typically with bear flag move, what you see, the way you can measure the outsized move is you can do it one of two ways. You can look at from the top to the bottom of the flag itself, or you can take the pull from the top to the bottom measured move. Now, I've already mapped that out over here, and I said, okay, if we do see a break out of this flag pattern, here's where the measured move is. In fact, it did get completed right at the bottom, and it bounced right off of that level at 410. So 410 is the critical level on the downside right now on the NASDAQ there. The other thing I will mention is the ongoing decoupling of the U.S. and China relationship, of course, is, they're trading blows, and China's dealt some gut punches, I would call it right now, to the U.S. One other thing to keep in mind for a lot of these tech companies is rare earth minerals. And that's a big thing. So rare earth minerals are critical for modern technologies like, computer chips, smartphones, even military equipment such as, missiles and satellites. And China roughly has 70% of the global supply. They mine most of it. And, slowly they've been taking things away as the trade wars are escalating. If they come out and say, hey, we're going to put export controls, the U.S. has put export controls on semiconductors. They could do the same thing. That could see a really squeezing effect of a lot of these companies. So that's another thing to keep in mind. I'll just do one last change, and I'll just mention one other thing here. I'm just going to switch to the RSI over here. We'll turn this on for a second, turn off our studies. One other thing on the weekly RSI, the Qs have hit a oversold region over here. That hasn't been seen has only been recorded 4 times in its sort of last 2 decades.
Really?
So back in 2020 we saw the COVID one, it hit that oversold level. In 2022 when we saw the sold off level, and then it was back in 2008. And just recently we just came out of that oversold level as well. So this is a key to keep an eye on, and we see it breaking through. Usually it means a bullish sign up. So we'll be keeping an eye to see if it does continue breaking above this recent high it just made, making out of that breakout, and we could see some further momentum coming through that. So that's a look at the Qs for us.
Very important heading into big tech earnings. Tell me you're going to talk about gold.
We're talking about gold, Greg. It's a gold rush, of course. Yeah. That's what's happening right now in the gold space, and a lot of this has to do with the fact that it's a pure flight to safety right now with the risk-off markets that we're having. What we're having is gold's breaking all kinds of records. Just hit a new record. I had to revise my price targets, but it just touched intraday right now on the futures contract at about 3,500. It's wicked off of that right now. We're currently sitting on about 3450 price range right now. But this is one to keep an eye out on. It's made a very seismic sharp move up here. You can see on the charts. We've had this strong candlestick pattern. It's a 3 candlestick pattern, which we call the 3 white soldiers. You see strong bullish candles forming over here, and they're gapping up on each movement. Now, usually one thing that gives me concern whenever you see outsized moves like this or very sharp moves, you usually see sharp pullbacks as well coming through in this front. So near-term support right now for gold sits at 3250, where we could test it back, where it could bounce, either retest that and bounce off of that. If it breaks through and is not able to bounce, then we could go further down to 3000. The backdrop of it doesn't seem to be that way. As you mentioned, the administration is kind of trying to engineer ousting of Fed Chair Powell. If that happens, that is going to be sort of a near-term cataclysmic event in the markets. You will see the U.S. dollar, it's already been sold off, and yields even ticking higher, and that could also just mean more catalyst and momentum for gold behind its back there. One other thing I wanted to mention, Japan could also be a seller of the USD because of the yen carry trade. So as the Japanese yen is strengthening, what that means is that if you're borrowing in that currency and you're investing in U.S. bonds, your spreads are getting tighter, and that could cause further pressure in the treasuries to be sold off as well there. So everything points to right now to seeing where gold is going to be that safety net right now for most traders.
All right, we got tech, we got gold, and of course sometimes you look at the put-call ratios to try to figure out how we're all sort of feeling as investors.
Yeah, we want to gauge our feelings, keep that in check as well. So I've got 2 actually queued up here. So I've got one $ PCND, which this one is specific to the NASDAQ, and then I've just done the equity one here. So the candlesticks that you're seeing right now, PCND, this is specific to the NASDAQ. So the way you'd read this put-call ratio, it's a measure of the total volume of puts divided by the total volume of calls. Anytime this ratio is below 1, it's more bullish posturing. And right now on the NASDAQ, we're kind of seeing that at 0.65, and on the equity space is just ticked up at 0.74. So overall, it looks like there's more volume of calls being generated. This doesn't necessarily mean it's bullish, because the traders could be selling calls as well, which is indicative of bearish nature. But it's just one to keep an eye on. We want to see the trend ticking up higher if we start seeing more protective positioning there on these two equity spaces there.
Interesting insights there. What are you taking a look at, Jason?
All right, we're going to take a look at the rental car market. That might seem like a bit of a stretch when we're thinking about tariffs, but I'll tie it all back together here. So we're looking at Hertz today. Hertz is a company that's decidedly in the sell bucket from an analyst perspective. They've got average price targets below $3 with a downside of roughly 65%. But Hertz itself has been up quite significantly. It's been definitively over the last 4 trading days. We had Hertz got a big infusion of cash from Pershing Square and CEO Bill Ackman. They purchased, let me get my notes here, 19.8% stake in the company. They're saying that even with the tariff environment as we see it, this company is actually uniquely well positioned. So let's kind of turn to the chart and take a quick look. So Hertz itself, you can see there's been some significant gap ups in the near-term trading, as I mentioned. It's now kind of achieved those, that parity, that pricing points they had kind of earlier in 2024, so they've rebounded to those levels. One of the interesting things that was kind of fueling the conversation around that investment was around Hertz is one of the largest owners of used vehicles in the market. They've got over $500,000 in the inventory. One of the plays here that's
500,000 vehicles?
500,000 vehicles, yes.
Yeah.
And they're saying that with many automakers with tariffs are halting imports into the U.S. because of those 25% auto tariffs. VW and Audi to name one. The projection here is if the used auto sales can go up by a value of 10%, that's going to have an average to Hertz's market cap of about $3.90 or $1.2 billion. So you can see on the chart, there's a big, the horizontal price line that I've got on the chart is really showing where that adds to the value of the company, and the company has been able to continue to tick forward and up, is up even today. So.
Interesting stuff. 500,000 cars. That's a big parking lot.
He sure is.
Maybe not all in one location. We spread them out. That's strategic thinking from corporations. All right, thanks for that, gentlemen. If you have a question for us at home for our team here, here's how you can get in touch with us. Email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. You can find more information about all of our trading platforms under that Get Started tab, so you can find the one that is best suited for you. And if you're interested in trying out the TD Active Trader platform risk-free, you can open a practice account by clicking here on the Try TD Active Trader button. Whether you're a new or seasoned investor, TD Direct Investing has you covered and has once again, for the 3rd year in a row, been ranked as the #1 online brokerage in Canada by the Globe and Mail. It is time now for trading, debating. The stock today is Intel in our spotlight. Before we get going with the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors, and significant losses are possible. So it is important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now let's engage in the debate. Stock of the hour, Intel. What made you guys pick this one out of all the semis in the world?
Well, Intel's probably best known for its CPUs and desktops and notebooks, and I'm going to do a throwback here to the glory days when you had a PC back as a kid.
Oh, in the 90s when I was young, and Intel assignments everything.
Yeah, the Pentium 3s, the Pentium 4s, and it earned you some street cred along with a Walkman. Of course, you had to have that. So really, this is all to say that Intel's been there at the scene since the advent of really the PC revolution. That's dating back to the 90s. And it finds itself at a critical juncture now, though. And I said the glory days there, so I've already sort of kicked off my points there.
Remember people looking down your nose in the 90s if you say, oh, you don't have the Intel chip, you have the AMD chip in your computer?
Yeah.
I'm sure you'll be fine. Remember that?
I do.
Right.
The cache they had, I'm sure you'll be fine.
Yeah. Those Pentiums, they really carried a lot of weights, and that was part of the reason why I want to look back at it too. A lot of good memories, and hopefully a lot of good memories to come as well. So.
Okay, I get some time on the clock here. You each have 2.5 minutes as per usual to make your case for the bull and the bear. Then time's the counter. Mm-hmm. You draw from a hat always to try to figure out who the bull and the bear will be. So. Drum roll, please. Who got it? Jason got the bull case. Why don't you kick this?
Yeah, I think we could tell by how we kicked this thing off how good Kieran is from getting into this discussion. But let's start here. To your point, The 1 and 5 year time frames aren't necessarily pretty, but that's, we're still talking Intel. We've already kind of laid out the case here. This isn't a flash in the pan company. There's a lot of history here. And the company's kind of took a look in the mirror and is charting a new course forward. Before getting into specifics on the company, we've got both from a fair market value perspective and from an analyst perspective, we've got upside potential here. And also, just as of yesterday, kind of flew into my inbox here, price targets from Cantor Fitzgerald raised Intel from $26 to $29, so lots of room to the upside here. All right, now big news. We're all aware. Recent CEO Pat Gelsinger, make sure I get that right, recently lost confidence of the board, and they weren't happy with the cost and the success or lack of success they may be having with regards to keeping the gap tight on Nvidia, but. There seems to be actual positive sentiment in terms of the new CEO, Lip Bhutan, whose appointment has generated positive reviews. They like his focus on innovation. They like his previous connections to venture capitalists in the semiconductor industry, and he's a man with a plan here. And so he's already started to kind of remove some of the bureaucracy from the leadership team, and he's bringing in their most significant departments are going to report directly to him. So he's come in here with the purpose. We're talking about their data centers, the AI groups, and their client computing groups. Those are all going to be reporting to him. Our last thing I mentioned before we get into the charts, and this is something that's up for debate in terms of long-term futures, but the CHIPS plan that the U.S. government has released, there was concerns that the administration might pull that back, but so far there's been nobody buying in from a Republicans' congressional support because of where the Intel factories are located in Republican-heavy districts, Ohio, New Mexico, Arizona. But so far Intel is the highest benefactor of some of those loans from the government to the tune of $8.5 billion. But jumping into the chart, one of the things that I like to see here is, yes, we clearly see that the price is down, but when I take a look at the support, we can see that the stock, after gapping down, held support around that $19 range. The stock has repeatedly tried to break through that. There's been 8 different attempts, so I can see that the stock has found value. Investors have continued to show support of that stock, and we've been able to see continuous purchases. And if we take a look here, what's showing you for next future buyouts is that
Ran out of time.
we'll kind of circle back that hopefully in a little bit.
There'll be time to counter a little later on. All right, Hiran, what do you got for us?
All right, I'm going to start by saying there are stocks out there that are closely watched because of the swift price trajectory upwards, but Intel is not amongst them. Intel's biggest issue that it has a track record of overpromising and underdelivering, which makes it really a risky endeavor based on where it is and bearish in view. I'm going to start by talking about a couple things. A non-existent moat, first of all. So as we mentioned at the top, Intel and AMD are sort of the two monopolies that hold the licenses for x86 processors, which is why for the longest few decades, when the advent of the computer, Intel was the chip that was manufacturing most of those systems. But now there's been a switch to ARM-based processing. In fact, Apple was the biggest one that did that migration, where they built their own chips now and peeled away from Intel. And Microsoft is also, trying to put their software available to ARM vendors. And if that happens, that would mean their biggest revenue driver for Intel, which is in the computing space, the CPU, could go down. The other thing that I also want to take a look at is the foundry business. The manufacturing is being the Achilles heel. They're trying to go head-to-head and toe-to-toe with TSMC. TSMC was offshore. It is now coming onshore with the tariffs. They're going to be spending $100 billion to do with manufacturing. There was rumors out there that they would partner with it, but TSMC, CEO recently just quashed that idea, said we're not in any sort of discussions whatsoever with Intel in doing any sort of joint venture with them. So they're going to go against the might of that. The other issue that they also have is their weak balance sheet. They have inability to generate free cash flow, and they're doing heavy capital investments in the chip manufacturing. Just to give you a sense of it, in December 2024, they had about $22 billion in cash, and compared to about $50 billion in debt. That's the highest level they've achieved right now. Intel was regularly producing about $10 billion in free cash flow there. And it's been heavily burned through. I'm going to go into the charts, just keeping an eye on time here, really. I'm going to start with the higher time frame and a monthly one. You can see this swift downward trend on the monthly candle, very far removed from where it needs to be. And I'm just going to switch over to the daily one as well, because you're seeing a double top formation, which is a bearish move down. And we've seen this significant measured move that I'm going to see if it breaks through over here, which is the critical level that Jay pointed out, the $17 level. I think there's still further downward pressure. You've got all your EMAs, or your moving averages, swiftly in the downward trend and in bearish territory, where the longer EMAs are above the shorter term EMAs when we talk about the 250 and the 21.
All right, there's the debate time to counter. Jay, I'll let you go first if you want to get back into that chart.
Let's get
that
back
I so rudely cut you off.
I know, how dare you?
The clock is the clock.
Some rules are the rules, I guess, right? We all got to play by them. All right, so let's jump in. I've actually got a shorter term time frame chart. I've got an hourly chart over a nearer term period. So it's really demonstrating that critical level of support for the price has been held. And what I've got this here is showing a triple bottom where the stock has actually bounced off and continued to go up. So what this is allowing me to kind of consider is, are we going to be, because we're now at that bottom of the trading range, is this going to be a range bound move and there's still money to be made on the upside of that range? Or if we can break beyond that, there's going to be something more decisive in terms of price action. Other factors as I'm looking at, still sticking with the platform, if I jump myself into the trading tab, I want to take a look at the option statistics. We've got our put call ratio down on the very bottom left. It's 0.18. So today that's decidedly on the bullish side of things. A couple of the things that were really jumping out to me from a trading perspective, looking here at the number.
You're really fighting on this one, not you?
I got to give it a go here.
Here's
Going down
smile on his
I
face
know.
while we're showing
But we've got our calls that are trading. 59% of the calls have traded above the ask. So we've got people out there willing to buy calls. Well, it's all about swimming with momentum. And the last thing I'll mention here before turning the mic over a little bit here is that I'm noticing here that the deltas that I've seen for call strike prices, 49% of them are under 20, meaning that yes, that's a low probability trade, but people are taking longer term bets to see if they can predict some upward movement over a lengthier period of time.
Yeah, by longer term, Jay, you're probably looking about at least half a decade at least to try and make it up for it. But I wanted to just pick on a couple of fundamentals, because that's where I'm going to charge at. They've had declining revenue, of course, significant declining revenue to the tune of about 30% on there. One of the big things as well, I looked at the geographic revenue makeup. China accounts for 34% of their revenue that they have. What's happening with China and the US? Oh, we all know that. So that means anything on that note, there's already an export ban that's already put, I shouldn't say export ban, but export controls on their semiconductor chips. So we know that's not going to be a competitive space anyways for Intel, but even on the CPU front, what could that mean going forward? I still think there's pressure, even looking at the downward. Now, the earnings are probably not going to be a whole lot telling for Lip Bhutan. I'm going to make sure I got that right. It's his first quarterly earnings that he's going to come out with. But interestingly, on April 29th, they have a Founders Day happening event, investors for the foundry business, which is the manufacturing. And we're going to really see a clear picture at that point, whether they see, is there any sort of restructuring taking place over there as well. The one other thing that I will say is, when you look at from a forward PE ratio valuation point, they are significantly overvalued at 43.48, even on a forward basis, just because the forward guidance earnings are so minimal. When you compare the denominator, when it's so small compared to even the price it's at right now, you're talking about 43x, which is significantly.
What can help that is more revenues, more partnerships in their foundry business that you've mentioned, in their 18A process. They've been able to generate significant interest around the business. We've got Microsoft, Boeing, U.S. defense spending big money. Microsoft loaned $15 billion of orders to have chips processed or made in their foundries.
That's a sympathy order.
A spirited exchange of ideas there. Now, of course, you're both going to have time to explain how you could potentially play those positions through options using TD Active Trader. Let's start on the bullish side with Jay.
Yeah, I'm thinking this is more of a long-term play to see if we can find some value in finding something that's relatively inexpensive, like many of the folks I showed on the option statistics. Let's find something that's going to be relatively affordable, but give me considerable upside potential. Let's go to the chart. I want to kind of show off just some visuals to help kind of bring this all together. Let's actually need to zoom out the time frame. We can see here that I'm electing to purchase a long-term call with greater than a year to expiry. So a leap would be what many people call it. The green line is the $25 strike price that we can go for. Let me zoom out to make sure we can get the timeline in there. And if we can see here, this is the time frame, the vertical line. So we've got lots of time for this to happen. And what's the old adage we've said many times in this program is all gaps are filled in. The gap line up to the white dotted line on the chart is kind of that empty space in the chart that if we can breach through that strike price, there's an opportunity for us to kind of fill that area back in and then ride this into hopefully some considerable gains here. Going back to the trade itself, what I've elected to do is buy some calls that are, or the potential trade would be to buy some calls over a year out if we're thinking about out into June. The reason I've chosen this is it gives me time to work. It also, when I take longer time periods, I can really minimize the theta decay from a day-to-day basis, so I know that I'm not going to be losing value. Pricing in the at the money straddle, it's coming in $8.50. If I put that up, that's going to move me to about just over $28. If I go ahead and purchase the $25 long call out to June of 2026, my break even is going to be below that expected move in the market. So it gives me an opportunity to take a really long-term plan. I do get deltas on this trade of it's still relatively high, almost 50% at 0.46. So I'm going to be experiencing some of the move if Intel does go up. I don't need to hold this to expiration. I'm only needing to spend just over 270 to get this trade done into my account to take that bullish position.
Always ask about the risks.
Let's take this, and like any option trade, and even in our master classes that we run on WebBroker, we're always saying is you don't need to ride these trades to expiration. If the trade isn't going in your favor, feel free to take the trade down and sell it to close, whether or not you're locking in gains or minimizing your losses. But if this does go completely the other way, your max loss is the premium that you spend to get into the trade. So in this case, if I get it for around $275, that'd be $275 a contract.
Important to remember, right? You can trade those options. You don't have to hold them right till the very end. What would you do on a bear side potentially?
Yeah, so for this one, again, knowing that we've got a period of volatility coming in and given the price action of which Intel trades at, the trade I'm going to be looking at is to take advantage of this volatility and doing an iron condor on this trade. So I've got the chart pulled up and I've just marked the two levels at which we're targeting to sell in an iron condor. It's made up of a credit put spread and a credit call spread. So on the downside, which is our put, we'll be looking to sell the 18, which has formed this sort of critical support area right over here. And then we're just doing a 3-point spread, so we're buying the 15. And on the top end, there is some resistance met over here just based on this big bullish candle that we saw, rejection off of this level, which is at that sort of that 21 strike level on the calls. And this is going to be a 3-point wide spread, so I'm going to go back to the options chain over here and just show you. Now I'm going out to a very maybe unpopular amongst sellers of options, far dated out. We're looking at about the August expiry cycle over here, so we'll probably get 2 earnings in before this comes due.
Still staying in 2025 though.
We're still staying in 2025, exactly. That's the key. So there's hope. So over here, what we're based on the 3-point spread, we're looking to sell that 18 again over here and buy the 15. And then similarly on the call side, we'll be selling the 21 and buying the 24. Right now, it was netting when I set this trade up, looking for a credit of about $1.90, which puts us just about close to that 60% range of the total, of the spread there. So $1.90 is what we'll take in if you do a single contract. What that means is we're going to collect $190 in premium at the onset of this trade. And then our break-even levels are going to be just below that. So on the 18, it'll be $16.10 on the downside. And on the up end, it's going to be $22.90 there. So those are my 2 levels. If it goes past those 2 levels on either side, we'll start losing money then in that case.
And losing how much money?
Okay, so our max is always going to be the spread, which is $3 in this case, minus the credit we took in. So it's $110 or $1.10 essentially. So the profile, the risk-reward profile is pretty matched up there.
Okay, interesting stuff. Thanks for laying out the bull and the bear cases for Intel this week. Just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. Now, before we move on, Jason, you're going to elaborate on the true range study. What can it tell us in times like these?
Yeah, we're going to be looking at average true range. It's a study that I think kind of fits nicely with the volatility and the focus on risk management that's been that's an all-time kind of consideration in the markets, but ever so recently with how wild some of the swings have been in the market. This study it's nice for 3 reasons. It's simple to understand. It's easy to add onto your chart, and it helps us to identify how volatile a stock is being now, and versus how volatile it's been in the past. So let's pop ourselves into the chart. I've got Intel here with just Bollinger Bands on the chart. By the way, before I add ATR onto the chart, Bollinger Bands can help us with volatility as well. It shows us the expected move out to 2 standard deviations on the top and the bottom band. But let's add average to range in. We're going to go up to our studies settings button up at the top, the little function button. If we can go ahead and do that, average to range happens to be right near the top. We can drag it over, get it added on. This is a study that's basically taking the range of a given day and then taking those days and averaging them together, sort of plotting it on the chart. If I go ahead and bring it up, you can see that with Intel we can track to see the average range the stock is traded from a plus or minus perspective on a given day. What's really interesting here is once we can see if that average range is starting to increase or decrease, that's telling us that the volatility, the price action is ebbing and flowing along with the market. But most importantly, one of the things kind of real world applications for this study is when we're thinking about risk management from a stop order perspective. Markets don't just move in one direction. Yes, we want to set our stop prices where it's at a price that's appropriate for our own risk that we want to take on our own trades. But if you do set your stop orders too close to the market, you run the risk of being stopped out before you're ready to be stopped out, and maybe the trade's going to could move in a direction that would be beneficial to you if you just set it too close. So the average to range could be one of the key points that you look at to determine if that would be if I want to set it just outside the pricing range that the stock's moving to allow the stock room to move. And then truly get me out if it does move beyond something that I'm not willing to stand.
In my foray into all this, I have been stopped out at times where I thought that was not the place to put my stop, because then it went the other way. But such is life.
Now you got an ATR, Greg.
There you go. Now I learned something today that can help me from not making the mistake again in the future. Thanks for that, guys. If the stock you want to see our debaters go head to head on, send your suggestion to td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. Then you scroll down, you're going to find a tab that says Join a Live Masterclass. This Wednesday, 2 p.m. Team is hosting an interactive session about TD Active Trader. The platform, they're going to showcase how you can customize your experience, ensuring you have the tools needed to trade and manage options with ease. Registration is required, and it's open now. I guess we're lucky to live in such interesting times. There's always something on the radar. What are you focusing on for the rest of the week, Kieran?
Yeah, so we're just, again, turning up to what's the waypoints for the macro side of things. We've got a couple of data points coming out and a very crowded Fed speaking calendar this week, of course. So Wednesday, tomorrow, we'll bring the ISM manufacturing PMI numbers. But probably the most important one for me that I'm going to be looking at this Friday is the final University of Michigan Consumer Sentiment Index numbers for April. Now, preliminary data shows that there is a drop from 57 to 50.8, and inflation expectations are spiking 6.7%, which is the highest since 1981. So Friday's final numbers will be a critical read on consumer stress, essentially, what's going to be gauging that. And then the other thing from the Fed, which is speaking, the number of the different districts, Fed bankers will be speaking, but there's also going to be the beige book release. And so this is not one I was overly familiar with, but tomorrow afternoon they're going to release this, the Fed, which gives insights into the May FOMC meeting. So essentially this book is just a qualitative report on the economic conditions by those 12 district banks in their regions and gauging what that is to be able to inform what the rates are going to be.
It needs a sexier name. We used to come in my old job, we'd break the beige book live on television. And it was like the beige book. It's like, well, it's pretty important. It's pretty important, though. It needs a sexier name.
Yeah, the alternative is summary of commentary of current economic conditions. So I figured why they went the beige one. They just went the color of it. But apart from that, Greg, I think it's a big earnings week, of course. But the one I'm going to keep an eye on is Chipotle Mexican Grill. So when you think about the fast casual chains, they've been struggling to get customers through the door right now, and everyone's kind of rethinking their moves. Chipotle is doing the exact opposite. They're in fact expanding right now. They just signed a development news just broke yesterday, the agreement with Alsea to open its first location in Mexico early next year. Now, Alsea is just a company that operates in Latin America and Europe locations and brings to a lot of these American franchises to the market, including Starbucks, Domino's Pizza, and Burger King. So they'll be ripe to take Chipotle Mexican Grill to Mexico, ironically. But this is also going to be on the backs of coming into the fast casual business where they really double down on the digital business, especially during COVID, which is what they created a name for themselves. And that really accounts for about 33% of their sales. Going into this quarter right now, you can see, though, I've got the chart pulled up. We've seen a big sort of double top pattern that's formed over a long term starting back in 2024. So it's just broken below this neckline now over here that we have. And this could signify pressure. Expectations going into this earning is 28 cents and 2.93 billion in revenue. Now, one of the things that they're going to be looking for is, their menu innovation, expansion of the stores, but also just to see how they're going to be forecasting what the foot traffic is going to be coming through the doors. So that'll be one to keep a keen eye on.
Interesting stuff. Tesla kicks it off with the so-called Magnificent Seven today, but we got a behemoth later in the week.
We do have a big one coming. We've got Thursday after the bell is, I still call them Google, but Alphabet.
It's so hard to say Alphabet. I get confused half the time. It takes me a split second to go, Google.
Just doesn't quite have that instant recognition. But Alphabet, they are reporting this Thursday, so all eyes on them. There's two really interesting things that are kind of coming out to me. One is that in terms of the earnings, I said, and then the second is the big news around the antitrust lawsuit that's coming out. So in terms of tech companies, they're pretty well diversified, right? They've got ad revenue coming in both from YouTube and from Chrome. Many of you guys are watching us on that now. They're picking up. You've got your Nest Home Solutions. You've got the high-profile Waymo autonomous vehicles. So they've got their fingers in everything. One of their biggest things is from an Android Apple. There's always that ongoing debate. Yeah. Well, guess what? They by far and away 71% of the phones globally are on the Android platform. So that's that. They've got that feather in their cap, but. That brings me to my second fascination is their ongoing U.S. Justice Department calling their practices monopolistic, how they have been requiring the Google search engine to be the default on Chrome browsers and have proposed the idea of having to sell off the Chrome browser from their business operations. So we'll have to wait and see how that is going to go. But jumping into the chart, this is actually got to be the third time we've seen a double top that we in mention here today in today's class. So we can see that they've come back to that 152 level. That's down 22% off highs they've had earlier in the year. One of the things I want to mention about this is, and this is true to really many technical patterns, the longer the technical pattern is going to take to form and develop, that could mean that we could expect a longer term that measured move could take. So we've got almost a year in the making in terms of this pattern coming to completion. So this could be a longer term pullback, but really it's all resting on the two things I mentioned. We've got earnings as well as the U.S. Justice Department. We're waiting and seeing with bated breath later in the week what some of those news announcements are going to be.
Another great show. I like how you referred to it as a class. It's like school's out. All right. Until next Tuesday morning. That's the show for the week. Thanks, guys. As always, at home, investors should perform their own due diligence before trading. Thanks for watching.